I think today, as we speak, 97%, if my statistics is right, what I read, stable coins are all US linked. If we are going to continue that to happen, two outcomes. It is going to be a US dollar economy. The US dollar is going to be more important. Then what happens to your monetary policy? The biggest thing that the central banker would think is that, is US going to decide about my monetary policy? How does it work? So then if we are talking about an alternate to US dollar, physical currency I'm talking about, then I think this question answer is very clear. You simply cannot allow US dollar stable coins and then keep quiet that they will take care of everything. You will have to think about what policy responses that you need to take. This is very critical.
So an activity-based licensing, and you can take an exchange apart in 6 components, right? There is the order book, there is the matching engine, there is clearing and settlement, there is custody, right? These are the core components of any exchange. And then you add all the hundreds of bits on top of that. Each of these activities can be sensibly regulated.
Recently, there was a study done by Primus Partners which showed that 27% of the biggest kind of investors and creators of products here, right, have actually moved out of India and moved overseas. And they are not, one example is Drive. Drive is an interesting competitor to Uber and Ola and all of that in Bangalore. They've closed shop, they started in Bangalore and Dubai, they've closed shop in Bangalore, and they're doing that in Dubai. So it's a big challenge there. And India has a $1.1 trillion opportunity by 2032 in this space.
Over the last 3 years, if you see, there have been numerous such incidents that have happened, not just in India, but globally. What really matters is how you deal with them and whether investors are protected at all times or not. In the absence of regulations, that is the risk that is imposed on the investors. That's not good for the country as well. And in the absence of any clarity, there are loopholes that exist and then people can use that, which is not good. But when you have regulations, you make sure that you are allowing the right credible players to operate in the sector. At no point customers are getting impacted, and your domestic industry, is run in a way where if there is any issue that happens, that gets resolved for the customers in a prompt manner. This is what's most important.
India's crypto story has been one of extremes, from investor enthusiasm to regulatory caution. The world is, of course, moving towards more structured frameworks. You have EU's MiCA, the G20 consensus taking shape. Of course, we do have FIU in India as well. But I think what we're going to discuss is it India's time to take a stand? And is the time now? So this is a question to all the panelists. Is it time for India to take a unanimous stand on crypto? The reason I ask is, as we are aware, RBI is steadfast on its stand, but recently the finance minister said that we need to prepare and engage with crypto assets, right? Like such a stable coin. So Dilip, let's start with you. What's your view? And we can go.
Yeah, so thank you, Shivani, and good morning to all of you. Early morning session for some of you is easy, but some of us have got at 4 a.m. to be here. But starting 4 minutes late for the first session of the day is actually pretty good. But I think we tend to, whenever we talk of regulation in the virtual digital asset, we always look at the investor side of things and the investment side of things, right? And by overly focusing on that, we forget the development aspect of and the other aspects of the technology, which enables different kinds of products and services to be delivered to people at low cost instantly in different corners of the country. Now, by delaying regulation or by delaying supporting this sector, not only are you actually putting Indian companies or companies built by young Indians like, let's say, Sumit here, at a disadvantage, and you are encouraging them to look at avenues outside of India. Recently, there was a study done by Primus Partners which showed that 27% of the biggest kind of investors and creators of products here, right, have actually moved out of India and moved overseas. And they are not, one example is Drive. Drive is an interesting competitor to Uber and Ola and all of that in Bangalore. They've closed shop. They started in Bangalore and Dubai. They've closed shop in Bangalore, and they're doing that in Dubai. So it's a big challenge there. And India has a $1.1 trillion opportunity by 2032 in this space. We are actually, every time and every month we delay, right, is there. And given that India took the leadership in G20 to get a global regulation, we've got a kind of a blueprint out there. G20 and 18 of the nations, but G20 is bigger than 20. 18 of those nations have some sort of regulation there. India does not. So I think it's time that all of us got together and created a regulation going forward. And it's not very difficult to do. There's so many examples there. You can pick and choose. You can do whatever you want to do. But I think we need to have clarity on this sector. You can say, okay, like fintech, please do your own regulation, have a self-regulatory authority. Great, but we need regulation here.
Yeah, I think, first of all, thanks for having me here. The answer to the question that you asked is astounding yes. I think it's high time that we look at regulations. Everyone knows that. Some people say it, some don't, but the answer is yes. And the best time to regulate the sector was yesterday. The next best is today. If we don't do it today, then we'll lose out. It's a big risk that's sitting in front of us if we don't innovate in the sector. Look, I am in this space from last 10 years, 8 years, almost 8 years since building CoinDCX. Every single day, week has been a nightmare to run an exchange in India because of the uncertainty, and every business wants certainty. 90% of my friends have moved out of the country. These are talented, bright IIT engineers, grads who have been building companies in internet space, have now moved out. And it's going to be very difficult for us to bring the talent back if we are too late in the game. So I think it's high time. It's a very appropriate time to discuss that. The world is moving fast. If we don't, we will be excluded out of this redefining of financial landscape that's happening across the world.
Right. Mr. Padmanabhan.
Well, first of all, thank you very much for inviting me. When I got this invite and looked at my fellow panelists, I was asking myself the question, am I a pigeon among the cats or am I the cat among the pigeons? But having said that, I think clearly the answer to the question that you have raised is yes, we need to have this regulation. Now, let me try to articulate it by saying few things. One is that, what is the future of finance? Now, clearly the answer is the future of finance is digital. The future of finance is tokenization. So if this has to be accepted, the second aspect we look at it is, when we are looking at regulation, at least time has come, and I made this point, that we need to, at least the regulators have missed the bus as far as the crypto is concerned. Crypto has come. Crypto is difficult. Crypto is more difficult in this country, or even stablecoin, because over and above the other kind of concerns that a regulator have. Incidentally, one of the qualities that people look for a regulator when they are selected is, do they know how to worry? They worry when nothing happens. They worry when too much happens. But in this case, the exchange control or the FEMA aspects adds complications to this entire aspect when we are talking about, I think Dilip was saying when we were discussing there, in a matter of seconds, in a matter of few cents, the money can go across, and it's seamless, right? So these complications do arise, but having said that, I also want to flag the fact that among the IMF countries, members, 70% of the countries are already looking at some kind of a regulation as far as the stable coin is concerned, because they feel that stable coin growth is going to be much more, probably faster than the crypto, maybe 300 billion today, but it's going to grow very fast. There needs to be some kind of a structured regulation to make sure that the world works together for the betterment in terms of, particularly in all these cases, I see the most important use case for cross-border transactions.
Hi, everyone. So I'll answer the question in two parts, right? The first part is, regulations are there to protect national interests and to protect consumers, generally speaking. On the consumer protection front, the ship has sailed to some extent. Let's look at the statistics when it comes to persons of Indian origin holding digital assets, right? At the moment, we're talking about 5 billion AUM of assets in terms of household holdings of digital assets. We're talking about a country which for the last 4 years has been the standout leader in terms of digital asset adoption. In a region, APAC, which already sees 69 to 70% growth year on year, right? So you are the front runner in digital asset adoption. And we have to recognize that. So now that we recognize that, and that is the trend in a very young, internet mobile, savvy, and a population that's focused on asset accumulation, what does that mean for regulation, right? And I take the points that the panelists have made that there are national interests to consider, and regulations should wrap around that. Among the G20 countries who made a commitment in 2023, I think India is probably the only one yet that operates on an AML registration model, hasn't gone to a full licensing model. The good thing is you have loads of countries ahead of you who tried this, architected this, failed, and then learned from it. So an activity-based licensing, and you can take an exchange apart in 6 components, right? There is the order book, there is the matching engine, there is clearing and settlement, there is custody. Right? These are the core components of any exchange. And then you add all the hundreds of bits on top of that. Each of these activities can be sensibly regulated and have been sensibly regulated in many parts of the world. Now, India is not alone again in terms of countries which have a concern with capital flight and currency control. Again, I think having a stablecoin project, and it doesn't matter if it's CBDCs, if it's private stablecoins, if it's rupee-backed tokens, the mechanism doesn't actually matter. In terms of the objective we're trying to hit, which is to manage the use of tokens that have an impact on the rupee, there have been blueprints out there that have worked for other countries. Again, India can adapt that, and India will always choose its own path. But there are templates out there that have worked, and I think moving in that direction makes most sense given the rate of adoption that exists in this country today.
Thanks for the detailed answer, Shekhar. Rather, that's gets into my second question as well, since you've talked about the 6 components that you required. Starting off with you, Shekhar, and probably, sir, you can jump into that. Do we need a separate regulatory body when we are talking about this ecosystem?
I think that's a question for existing regulatory frameworks to consider. I wouldn't want to delve into that too much because it's a bit of a black box, right? But what I would say is there are 2 models in this world. There is the Dubai model where VARA was specifically created to deal with this. There are many other countries which have folded it within the securities and central banking frameworks. The outcome is the only thing that matters, right? As long as they have the constitutional mandate, I don't see why it has to be a separate body. But again, to Sunit's point, right, this is an opportunity which is cresting in India. 11 to 12% of all global developers on blockchain projects are of Indian origin. And a vast majority of them are not in India anymore. And so that's a point of concern. That's my view on that.
Right. So what do you think, Padmanabhan sir? Do you think we need a separate regulatory body?
See, look, this question keeps getting asked whenever we see something where resolution is not happening quickly. But I'm not very certain that having a separate regulatory body is going to solve for everything. I think what we need is the people with the right attitude should be able to say that now my idea is to, if innovation has to happen, I need to allow innovation to go through till I see an issue at a macro level, then I step in. And that's how, in fact, if you ask me the question on a different context, how microfinance grew up in this country, I think it is because of the light touch regulation to start with. So if we start thinking about the most difficult part of the regulation, now let me also make a statement here that unless we are able to get the other countries and have come out with some common standards, one of the important aspects necessary for any kind of a tokenized version to function as a money medium of exchange will be lost, because the singleness of money, which is important, will be lost. You cannot have 20 stable coins in your pocket and keep paying for anything. So it is important the regulators will have to think through whether a separate set of regulators will come out with better outcomes. I do not know. But having said that, please remember that Reserve Bank itself in a way accepted this because they recently formed a separate department called the FinTech department to deal with these aspects. So these are moving things, but outcomes cannot be based on, a separate setup.
So just a comment, and probably Sumit, you would want to agree or disagree with it. What you just stated, sir, fintech has brunt or bear the brunt of the not having RBI look at them directly, but then when they are right there trying to do something, some policy comes up and, I mean, this is my opinion, but of course...
I can answer that. The point here is in a technology-driven scenario, I think one of the important attributes that a regulator must have is the agility. Now, you cannot expect things to happen, continue for some time, pretending that nothing is happening, then come and stop everything. So in a very lighter vein, I would say that probably in this country, fintech is over-regulated and stable coins are under-regulated.
That's an interesting one. But coming to Sekhar, to you and Sumit, to you as well, more specific questions to you. Binance registered with FIU last year. It's almost a year now. How big or how significant is India going to be for you guys?
Look, I think across digital asset world is going to be a big year. Again, I think statistics help. So FIU registration is at this point the only regulatory touch point, right, for crypto exchanges like us. Of course, the PMLA allows for the FIU to then use that corporation to support other agencies on the back end, and that's totally fine, and that makes total sense. In the last couple of years, and we are familiar with this, in the last couple of years, we've responded to close to 225,000 law enforcement requests globally, and we do this at scale globally. We've trained or collaborated or worked with 400 plus law enforcement agencies around the world in the last 2 years. And so our cooperation with FIU, whether it's via FinNet or via SIOG with other law enforcement agencies, is something that we do across the world. We think this works for now from a perspective that we want to control some of the risks with digital assets. And these are tail-end risks usually in nefarious actors, which we need to weed out of the system. We're also fully KYC'd across the world, including in India. And that's one of the plus points of a centralized exchange, right, of CoinDACX of us. And one of the things we are always concerned about as an existential crisis commercially, but also from a law enforcement perspective, is the leakage of users to unregulated, unlicensed, decentralized platforms, which are just ghost protocols, right? And there's no way of touching them or dealing with them. And so while we are content with this outcome for now, what we really hope for is a full scope licensing framework, because that provides business certainty, right? And Sunit mentioned this. It's a struggle for everybody. I think there would be a lot more direct investment in India and sort of job creations and placements here if there was a clear path forward. What activities are we allowed to do? What are we not allowed to do? What activities are controlled in what manner? What are the risks that the regulatory bodies want to cover for? Because there are reams and reams of technology tools that we can bring to bear to control for risks, right? For example, facial ID recognition, post-deposit, pre-trading, right? To deal with device ID change issues and mule account issues. For example, we have mandatory self-trading prevention mechanisms. We have mechanisms that kick in when your futures or derivatives trading incurs a certain amount of loss to stop you as a cooling off measure, which is not available in TradFi brokerages, right? These technology tools allow operators like us and CoinDACX to do things at scale, but in a risk-controlled manner. So we're looking forward to that sort of sensible regulation that gives us the roadmap to work with regulators to basically blueprint what India could be in 5-10 years. And at its current course, digital asset adoption is scheduled to hit 30 billion in 5 to 7 years' time. That number could steeply accelerate if we had a framework that allowed people to participate with a bit more confidence in what's going to happen.
Interesting. Sumit, you said you've been building the crypto exchange almost a decade. And I'm giving my feedback. As a journalist, I rooted for crypto because I thought it was the most secure platform in terms of security. The last 2-3 years, probably I can't say the same thing. The kind of hacks we have seen, the kind of responsibilities exchanges have taken has kind of been weird, if I have to use. So one was trying to convince the regulator that, guys, we need to be regulated, but this is happening simultaneously. And if you are losing retail investors' confidence, that becomes a question mark. How do you see one of these, and how are you making sure that retail investor continues for crypto?
Yeah, I think that's also an important one. And what I'd like to say is that over the last 3 years, if you see, there have been numerous such incidents that have happened, not just in India, but globally. What really matters is how you deal with them and whether investors are protected at all times or not. In the absence of regulations, that is the risk that is imposed on the investors. That's not good for the country as well. And in the absence of any clarity, there are loopholes that exist, and then people can use that, which is not good. But when you have regulations, you make sure that you are allowing the right credible players to operate in the sector. At no point customers are getting impacted, and your domestic industry, is run in a way where if there is any issue that happens, that gets resolved for the customers in a prompt manner. This is what's most important. And customers at all times should always be protected. That's what, it's a solved problem. A lot of solutions exist there. So I think that is one approach to solve it. And in terms of the point that Sir has mentioned, I think the way the industry is moving, the pace at which things are moving, right? It's very important that we will not be able to sort of have a rigid framework which will solve for the next 5 years. It will continue to evolve, and the approach there should be light touch regulations that solves for investors at the center of it, gives visibility, supervision to the regulator so that they are comfortable if something is going too fast or too slow, and also make sure that your businesses in the country are sort of running in a nice manner, following all the guidelines, no bad actors are using the system. So all of that actually will be a subset of the overall framework that will come.
Right. The next most talked about, of course, topic has been stablecoin, and we must thank President Trump for it. He has made it a buzzword. But having said that, this is CBDC versus stablecoin. And I'm asking this question to all the four of you here. India is yet to take a stand on it. Should India recognize an INR-backed stablecoin, or we head again towards a US-backed stablecoin, or again are we going to lose this battle as well? Dilip, would you want to start?
I think one of the challenges that the RBI is facing in terms of the whole regulation in this space is the dollarization of the economy. Now, if you want to address the dollarization of the economy, what did BRICS do? BRICS actually created a trade settlement mechanism based on virtual digital assets, which is non-dollar linked, right? And unfortunately, India did not participate in that. So, if we talk about how to address it and what to do, there are solutions, right? And again, the challenge here is that one view could be the whole world is doing it. The whole world did something in 2008. India did not do it. India came out of it in a very different manner than the others did. Similarly, during COVID, a lot of people did, X percentage of GDP and pumped it in. India did a different thing. But I think this time, possibly the tea leaves are reading slightly different. So we should look at, and since we're the largest remitters in the world, right? And using an INR-backed stable coin will reduce the amount of charges that it is remitted to India. We'll get more money into the hands of Indians. So I think we should look at it seriously. We found the UPI moment. Is this the new UPI moment in international remittances? That's one thing. Trade settlement. A whole lot of use cases could be done. But again, like Mr. Padmanabhan said, we need a global consensus going in here. But I believe we should seriously look at Indian INR stable coin. CBDC and the stable coin don't compete with each other. They have different use cases. And in fact, very simple. You want to increase CBDC usage in consumers? Say you can only use CBDC to buy any virtual digital asset because they have the wallets, they have everything. It eventually solves a whole set of problems for everyone.
Mr. Padmanabhan, CBDC frankly hasn't gone anywhere. So again, the same question, but this in context.
Yeah, I think your question whether we should think about stablecoin, rupee, dollar, I think today, as we speak, 97%, if my statistics is right, what I read, stable coins are all US linked. If we are going to continue that to happen, two outcomes. It is going to be a US dollar economy. The US dollar is going to be more important. Then what happens to your monetary policy? The biggest thing that the central banker would think is that, is US going to decide about my monetary policy? How does it work? So then if we are talking about an alternate to US dollar, physical currency I'm talking about, then I think this question answer is very clear. You simply cannot allow US dollar stable coins and then keep quiet that they will take care of everything. You will have to think about what policy responses that you need to take. This is very critical. Now, if I can take a sentence to the issue that Sumit talked about, I think the regulation has to today move towards, as far as these aspects are concerned, more and more principle-based. Where you say that the regulator will have to upfront say that these are 5 things which has to be adhered to as far as this country is concerned, and 5 things which are not acceptable to me. It may be acceptable to US, is not acceptable to me. Once that certainty is there, then the market moves better.
Yeah, you can go ahead. So, Sumit,
Yeah, I think it's great hearing that from sir, right? In terms of principle-based regulation, I think that is the right approach. And as things evolve, we can continue to evolve those regulations. In terms of stablecoin, just one point I would like to add, and all the data points states that $300 billion in circulation right now, probably going to touch $2 trillion in the next, by 2030 or so. Multiple reports, so that's undoubted. And US is moving really, really fast. And if we don't act, what they are doing is they are internationalizing dollars. What India cannot sit idle. India need to internationalize rupee so that our economy becomes stronger. If we don't act on it, that's going to be very slow, and we will lose that as well, because like sir mentioned, 97% and even more of that is US dollar-backed stable coins. Many other countries are now launching their regional stable coins. India does not have anything. CBDC is the only effort right now. I have different point of view there. I mean, CBDC is good, but see, that's for a different use case. If we want to internationalize rupee on retail, for example, cross-border, I think it was already mentioned. For cross-border, CBDC, great, fantastic, you can apply. But if we want to internationalize rupee, then there is a need for government to also allow INR-backed stablecoins, something that we believe is going to strengthen things a lot more, because when this $1.7 trillion will get added, where is India sitting in that? And that's something that we should think seriously about.
right. Sikar, would you want to add?
Sure. I think it's closer to 99% USD stablecoin dominance. Mica and euro-denominated stablecoins have barely made a dent, and for good reason. Nobody is interested in using it for international settlements. The reason why the US dollar is dominant in international trade and international finance is because it is the choice instrument for settlement, right? And because it's backstopped, and we all believe that it'll be backstopped. Now, India, I think, is on the cusp of a model where, thanks to the Trump administration and Chairman Paul Atkins, they have accelerated the move to entrench USD, because it's programmable and it's interoperable, right? And it's now circulating at a higher velocity. And GDP is a function of money supply times velocity, right? And so the velocity of USD is going to increase, and it's already increased. And now it is possible for a person in India to deal with a merchant in India, potentially, right? And use a digital version of USD. And that is not well, you can put the brakes on that, but that's going to happen at velocity around the world. Now, therefore, countries around the world are waking up to this and going, well, we have national interests here, and we also have to make our currency interoperable and digitally available so that it remains at least at parity with our with their current standing, right? And so the rupee has an opportunity, and this is purely a construct and a decision for RBI. How you build it is totally up to India, right? But building something that works, that's interoperable and programmable, will at least maintain India's position in the pecking order, in my personal view. Just coming to CBDCs versus stablecoins, right? I think any country has to make a clear-headed choice. CBDCs also lend to bank intermediation, because what happens is when CBDCs are launched, depending whether it's wholesale CBDC or retail CBDC, it's going to pool liquidity from commercial banks. It has to offer some interest rate, right? Some returns to be attractive. Otherwise, there's no adoption. The moment CBDCs offer interest rates and yield, some of the deposits that go into commercial banks are going to go into CBDCs. So what does that do to commercial banks? It affects their credit cycles. It affects their balance sheet. It affects fractional banking. Now, these are structural problems that CBDCs face, and different countries have tried to solve it in different ways. And I think we just have to be clear-headed about what the trade-offs are. Now, if you do a rupee-backed stablecoin issuance, and there again, you have a fork in the road. Are you going to go the US route, which is public-private partnership, and have a whole bunch of private companies issuing effectively USD-backed stablecoins? The control mechanism there usually is one-to-one reserve management, right? So with CBDCs, it's backstopped by the government guarantee, with private stablecoins, one-to-one reserve management. Or you can do a government-issued stablecoin, which I think makes the most sense to me. So I think these options, they're all relative. They're always trade-offs. India just has to choose a set of trade-offs that it is comfortable with.
If I can just add one thought, which I just... we will have to admit the fact that CBDC is also a stable coin. It's a government-issued stable coin, basically. Now, one question for policymakers thinking through is that whether we should talk about some kind of... he talked about the public-private partnership. There is any possibility of linkage between a private stable coin, which ultimately coming and resting in a CBDC, so that, I mean, the singleness issue and all those points are taken care of. So, lot of thoughts need to get into this to see how we position ourselves, but it's very important.
I have just been told that I need to get into the Q&A segment. We already have a hand, but I have a question, and sir, I'll come to you. This is more for both Dilip and Sumit. You know, and you mentioned that as well, the whole founder ecosystem moving away from India, that's a bigger concern. And crypto and stablecoin is just not about one technology. There's a huge base here. You have blockchain, you have Web3. But how is that panning out, sir? I mean, Dilip, I have to ask you this. Has it impacted that segment as well, the innovation going away from here?
Yeah, that's the figure that I quoted, you know, in the wake-up call, that 26% of people after Sumit actually also mentioned it. I think to address that, you have to do some very simple things. You know, today, just try and register a company which has got crypto in its, memorandum of articles or articles of association. You can't. There's a huge bias. There's so many state governments that are doing pilots, etc. Even the sandbox, the RBI sandbox specifically prohibits crypto things coming in there. You don't get banking opportunities, right? Banks, there are just one or two banks which actually the whole system is dependent. There's no insurance, Indian insurance available. You're talking of consumer protection, you know, allow them. So there are a lot of simple things: company law, registration, access to finance, banking, you know, insurance, which you can actually provide for this whole ecosystem and make ease of doing business in Web3 better. That's the biggest thing. I think you're going to see everybody, whether it's Switzerland, last week, we want to be the crypto capital of the world. Vara want to become the crypto capital of the world. Hong Kong wants to become crypto capital of the world. And, you know, Shekhar mentioned that India are the largest adopters, and, you know, we don't have something here. So I think we need to look at this in a very, very serious manner to see how we can actually create an ecosystem. Otherwise, we are choosing technology. We are saying, you know, tokenless blockchain is better than token-based blockchain, and we are pushing everyone there, and might make a mistake going forward.
Sumit, your point, and then we take the first question.
Yeah, I think if you look at the current landscape, on one hand, India is #1 globally when it comes to adoption, 3 years in a row straight. India is #2 when it comes to number of Web3 developers, very soon going to be #1 in 2 years. That's on one side. On the other hand, what happens to businesses? Right at the time of incorporation, problems. You go to a bank to open a bank account, not possible. Taxation, 1%, 30% capital gains, no set off allowed. It is like holding Bitcoin, which has been the best performing asset class of the last decade, is a sin. It's treated like sin, right? You don't get support from banks, any fintech companies. People like sort of don't like to say the word crypto, whereas on the other side, there is everyone rushing and building companies, building innovative solutions. And what has happened is that very soon, we will see that the ecosystem is not developed. We have the users, we have the developers, but there is no infrastructure, there is no ecosystem that lets India compete globally. And that's a big problem that I see right now. I mean, on ground, it's difficult to hire talent. If current companies, domestic companies are not able to hire talent, how will we see the next crop of companies coming? It's impossible, right? So N number of problems. Singapore, UAE, US, these companies are welcoming crypto companies with red carpet. In India, companies are welcomed with the red tape, right? It's a problem. It's a problem, and I do believe that we need to increase the participation, government and private discussions in a structured format, in a defined format with some timelines, so that, and principle based of course, so that we have a path, we have a clarity. Otherwise, sitting in the current position, not keeping it a priority or keeping it status quo is not going to do any benefit. We will then again play the catch up, and we will then again be sort of losing out on what's happening globally.
Yeah. I hear the founder's angst here, but let's move to this question, sir. If you could please state your name and organization.
Good morning. Thank you. My name is Suresh Narayan, and been in corporate, now representing academia. I have a lot of students who gamble in crypto, for want of a better word. And I'd like to pose a contrarian question to the crypto community. I mean, I hear a common theme saying that there's lack of regulation which is impeding the growth. My question is, what has the crypto community done, like a mutual fund SAHI campaign of AMFI, to create awareness in the community at large, to kind of diminish the risks that an Aam Aadmi like me, an academician, perceives? Look, this is a risky asset. I heard you saying best performing asset in the last 10 years. If you go back, equity is the best performing in the last 30 years, superseding gold as well. What is the community doing to create awareness, to say, look, it's the likes of, as she said, the last 3 years you have so many people vanishing. What is the underlying security to that asset? What is the community doing? You may also argue that 91% of people lose money in equity derivatives, so they might as well lose money here as well. Right. But what is the community doing to create awareness and say, look, we're not as bad as the people think us to be?
A valid question, especially looking at India and where the most new digital users are going to come from, right? They're probably not going to be as savvy as the urban user is. But probably, Sumit, you can start. Sekhar, you can take it. Dilip, you can as well join in.
Sure. A lot of that may not be visible outside, but Coin-D6 has been focusing on educating masses around and highlighting risk as much as possible in our all communications. We have educated 45 lakh Indians around blockchain technology, around Web3, not just about investment. Investment is one part of it. And investment, of course, are risky. But that does not mean the technology is bad. All of us use internet. But probably most of us started internet with gaming. We were playing games when internet was new. We did not know what will happen like 20 years down the line. So yes, there are some risks. There are a lot of risks, in fact. Investors need to be educated. They need to be aware. And industry is not big enough right now to be able to do mutual funds kind of campaigns because it has been curtailed. There are multiple nuances that we need to look at. But in terms of the industry, there have been a lot of efforts that have been put in. And I think what is missing right now is everyone coming together, but now with Bharat Web3 Association, we have industries coming together. It's like players coming together. It's not just exchanges. These are blockchains. These are fintech companies working together and making sure that we create the right framework so that investors are sort of always safeguarded. And that is the reason why we have been asking for regulations. Regulators have a oversight on us, have a watch on every activity that businesses are doing so that these things are sort of does not harm in future.
It's a very good question. So I think 60% of India is under 27 years old. And one thing we know about young people is that they will do what they will do, right? Our responsibility to the community at large, young or old, is threefold. And we say that as a global company. First is obviously security, right? You have to make sure that customer assets are effectively secure. And that is the lifeblood of any financial institution. So I'll come to the education point in a bit, but this is fundamental, right? And so having secure licenses in 22 jurisdictions, all of our ISO certifications, all of our SOC 1 Type 2, SOC 2 Type 2, all of these are baseline for what is a robust, resilient, and scalable architecture, technical architecture. We process 1.4 million transactions a second. And so you can imagine the scale of issues we face when it comes to compromise attempts on our infrastructure. And having processed 150 trillion assets in the $150 trillion worth of assets in the last 8 years, we've learned a lot in that process. So we know security is critical. Second is privacy and compliance, absolute non-negotiables. Third, to your point, Mr. Suresh, is education, right? So Binance Academy is a non-profit arm of Binance. And we have, to date, 60 million users around the world who are active on that platform. And what does the platform do? The platform has about 600,000 tutorials, webinars, information sheets, documents, doing one thing, sole purpose, is to educate. Because you have to know as an investor or a person trying this out for the first time, first fundamental core technologies. What is blockchain? What are distributed ledger technologies? What do they do? How do they operate? What are wallets? what are private keys and public keys, and how do they work in conjunction. You have to understand the technical architecture of what you're dealing with before you do anything at the financial architecture level, right? And so a lot of that effort in the last 8 years, and we've sunk a lot of time, money, and people into this, is to build that information base for our users globally. And this is accessible to people all over the world. I spoke to some gentleman last night who was asking, can I use that information to teach my students, because he runs programs? And I said, it's free for all, right? It's just there to educate. And so that, combined with our efforts with law enforcement agencies to weed out nefarious actors, it's a twin joint approach. These are critical. So education is actually how the next 1 billion users are going to start using digital assets, because the core traders are already on the platform. The next 1 billion users are looking at, can I unlock latent potential? Right? Can I use payment systems, for example, for simplicity and use? Can I look at crypto cards, for example? Can I look at tokenized assets? Like what can I get into? Because a lot of the standard asset bases have been unavailable to a large segment of the population, right? Because bonds, properties, etc., they cost a lot, upfront capital. But now we're looking at a model which can tokenize them, fractionalize them, make them available. Has to be done with risk controls. I've mentioned some. We do customer suitability assessment, just like banks and insurance companies would. So if you're getting into more complex products, you have to have either the skill, knowledge, experience, or the financial position to take on those products. So we do customer suitability assessment in key jurisdictions to make sure that we are only exposing people to the products they are suitable for, or vice versa, right? So these are all part of the measures we take. It's an ongoing journey.
So I think very valid question. So what, at the industry level, we've done collectively, we've done first kind of a customer or consumer protection guidelines, which everybody in industry actually follows. It means that you got to follow the FIU guidelines. It means that you need to follow the consumer protection laws, etc. It's on our website. The second thing we did was token listing. We actually use best practices around the world. We have taken out a token listing guidelines. So, one of the big things in this world is that there are good tokens and bad tokens. The bad tokens are called something else, but let's not talk about it here. The third guideline, Shivani mentioned about all the unfortunate hacks, etc. We brought out a cybersecurity guidelines. We work very closely with Certain on that. Recently, Certain updated their whole thing, and we are actually doing that. And, we are now looking at an investor education guideline, which is based on the MAS model, where when you onboard somebody, you have to actually do something, which I don't think the mutual fund industry is actually doing right now, but we're even looking at that going forward. It's in the final stages of that. So, and we brought out a whole campaign, a 100-day campaign on, social media, because that's where all these people are of, what to do and what not to do. And we are continuing that currently. So we are trying, but as Sumit mentioned and as Shekhar said, that X percentage of your investment in mutual fund goes into AMFI, who then drive that thing. We are not there, yes, but hopefully we'll get there soon.
Right, this is all the time we had. I have been told that I've already taken a few more extra minutes, but thank you for the audience, and thank you for the panelists here. Really good discussion. Thanks.